So Johnson Chukwu is joining me right now, the Group Managing Director at Carrier Asset Management, for us to take a look at President Tinubu's economic policies, perhaps announcements and actions. Welcome to you, Mr. Chukwu, and thank you for joining us.
Thank you, Sister Nancy, for having me. Good morning.
Good morning. Okay, let me ask you this question, which is from the intro that I read earlier. Do you have a sense that President Tinubu has hit the ground running, or he hit the ground running and put us all in limbo?
The way I would look at it is that I would say he has done some heavy lifting. You mentioned the issue of subsidy removal, harmonizing the exchange rates. Those two major factors have been part of the elephant in the room that previous government have been dancing around. So he has taken them out, or he is dealing with them. Of course, the multiplying impact of this he has to deal with. And that's, for me, is actually the greatest risk the economy is now exposed to. But in terms of taking the decision to take out the subsidy on petroleum products, as well as harmonizing the exchange rate, he has done good. And those, like I said earlier, those are some of the elephants in the room, some of the heavy liftings that needed to be done in the economy. There are several other policy decisions that needs to also be taken. But I would say two are down, a lot more still to go.
Okay, which other two are you still expecting?
Well, if you look at some of the issues that we have around the economy, you have to look at the issue of insecurity. The insecurity issue, which didn't used to be an issue in the country, has become a front burner and is gradually negating every other measure that is taken. You mentioned inflation rate about 22.4% in the month of May. That was largely driven by food inflation, about 24.8%. And food inflation was driven largely by insecurity. So you need to address the issue of insecurity. The other aspect that relates to the issue of heavy lifting is the governance of our oil and gas sector, including the security around the oil and gas sector. When I talk about governance of the oil and gas sector, it includes everything around the oil and gas sector value chain. And we also know that that sector is a critical sector, at least in the short to medium term, for the economic health of this country. That has to be addressed. And what I'm referring to is to the relationship between residents or inhabitants of oil-producing, oil-bearing localities and the government or the oil-producing activities, which has led to a very sharp decline in oil production. And if we don't address the issue of oil production, we are seeing oil companies exit. Initially, they started from the deep offshore assets. They are gradually exiting they started with onshore assets, which are the assets on the land, and they are gradually even exiting even the deep offshore assets. So which says that there's a fundamental problem we have with oil and gas industry. And we need to also address that. It has to do with the issue of theft, issue of breach of pipelines, insecurity around that regions. So for me, if you're talking about two immediate things that need to be tackled, there are some of the two immediate things that need to be tackled. There are still several others we have to look at.
With all of this, do you have a sense of President Tinubu's economic strategy? Because it seems that I know there's a policy document, and we'll come to that in a bit, a policy advisory document that was released, I think, sometime in May, or was it June? But do you have a sense of where Mr. Tinubu is going? Because it seems that all of these policies announcements are coming perhaps piecemeal by piecemeal without really addressing the structural and the fundamental issue that Nigeria has in its economy. I hope you understand what I'm saying, a full sense of addressing the challenges and not just looking at the symptoms.
Okay, Nancy, the two issues I just mentioned, both of us have mentioned, which I call the heavy lifting have been done by the current government, are issues that virtually almost all the people, the front runners in the presidential election, held on February 25th, had a common opinion on. I mean, Mr. Peter B has said he will take out the subsidy. and that he also talked about the exchange rate difference, and he said it was criminal. It was amounts to criminality to anybody to be having that we're basically supporting or subsidizing the rich. So, and I know Elijah Atiku Abubakar also was of the same opinion that issue of subsidy we have to go and exchange rate will be harmonized. So in that wise, I would say these are still in tandem with what every or virtually everybody who was running for office, given where we are, where economy is, had a common opinion on. There are other aspects that we can now ascribe to President Tinubu, which relates to his appointment of Taiwo Oyedele as the special advisor on fiscal policy, which we will now need to look at when they come up with their tax policy. We don't have the tax policy yet. What we know is that they suspended the implementation of the Finance Act, or delayed it to defer the implementation to September this year. But we need to see specific tax policies or fiscal policies to begin to form an opinion on the pure economic direction of the government. But you and I all agree that Mr. Peter B, Elijah Atiku Abubakar, and then candidate Asiwaju Bola Ahmed Tinubu are all free market oriented thinkers, and that either of them or any of them would drive a free market economic policy. So what we've seen is a tendency towards free market economic policy. Like I mentioned earlier, there are concerns I have, and I guess a couple of people also have the concerns, that the measures so far taken, which you know that I'm a clear advocate of removing the subsidy on petroleum products as well as accommodating the exchange rate, whether there was thorough planning that took place before the implementation of those policies or the policies we announced. And the concerns that if there are not thorough measures to mitigate the unintended negative consequences of these policies, if they're not well managed, they could become, or they could turn out to be something with such adverse negative impact that they will begin to erode the benefit associated with them. And just to bring it further, today what we now have is that our economy is now fully aligned with global economy, which means whatever happens in the global economy should have a direct impact on us. There are insulators previously, like the subsidy was an insulator, or circuit breaker, as you may call it. Those things have been removed. While we support that it should be removed, we also believe that just like any economy, the government has to build insulators or circuit breakers that will protect the most vulnerable. The government has come up with a handout of 8,000 naira, which is a stopgap arrangement. It doesn't really protect the most vulnerable in the medium to long term. It's just a kind of what you may call a palliative or a pain relief. Like you take, when you have a headache, you take a pain relief to calm down to stop the headache momentarily. But it doesn't address the fundamental issues. And further to the concerns I have, today we have a harmonized exchange rate. We don't seem to have the capacity. The central bank doesn't seem to have the capacity to intervene in the market to maintain exchange rate stability. And I did mention that two critical components we need to attract foreign investors. You must have exchange rate stability and you must have liquidity in your first market. We don't seem to have both. If you don't have exchange rate stability and you don't have liquidity, you need liquidity to have exchange rate stability. If you don't have that liquidity, what you're going to see is Naira will not depreciate. I looked at the past this morning and I understand by weekend, the parallel market had gone to 822 Naira to $1, and the I&E winner had gone to about 803 Naira to $1. And the implication of that is you're going to have landing costs of refined petroleum products at much higher rates than what we are currently the pump price today. Again, you will see crude price trade about above $80 per barrel. I think more than $81 per barrel. That will translate to higher price of plat. So any importation that is done today based on current plat rate will land at a price, at a cost above 500 Naira. So you may end up seeing a pump price of maybe 600, 700 Naira per liter. which I doubt if Nigerians have the capacity to absorb that. So if we had the liquidity in FX, then we would have only be dealing with one factor, which is increase in crude price. But we don't have liquidity in FX, and we are seeing a depreciation at a rate that is of concern to me, and I should be of concern to people in government. At that rate of depreciation, there are concerns today that Naira could trade at levels that are unimaginable. And further to that is that when people, if this is allowed to fester or to continue, you're going to get a point where people will panic. They want to convert their local currencies to foreign currencies, and then demand will automatically become too high for the supply, and that becomes a self-fulfilling prophecy because you're going to see further depreciation and inflation will go up, standard of living will deteriorate further, and it could lead to some level of social issues. So those are the things that are concerned to me, that measures need to be taken immediately to attract liquidity into the FS market.
So and what kind of measures, Mr. Chukwu, if you allow me to come in here, I've listened to you, what kind of measures, even last week, I discussed this, addressing FX liquidity, and also 2 weeks ago, because I see that there's a problem out there. But what's your recommendation as to addressing that challenge? Because this was why the Central Bank of Nigeria used to do what they called a managed flute. At times it will intervene, but now we have a market that they can't even just come in anymore. So where do we now get FX liquidity?
Okay, they're actually coming in because they are actually the one providing the liquidity, the little liquidity we have today. They are still the market makers. They are the major, most inflows coming to the market, most supply coming to the market is coming from the central bank. But where do we get the FX supply? Which is why when I spoke earlier, I said, look, probably I don't think the detailed planning was done before the policy announcement. That detailed plan would have meant that they would have assessed the volume of unmet demand. That is demands in central bank that have not been met over time. That will include remittances to the airlines, matured letters of credit that have not been met, from A transactions, there's implicit transaction, dividends, remittances, capital remittances, school fees, and what have you. So if they had assessed that, they would have looked for what we may call foreign exchange support line from a global financial institution, probably from a bilateral reserve bank. That would have meant that at the point of announcement of that policy, the first thing would have been to clear the arrears. And like I told a couple of friends, there's what they call show of force or show of strength, even if it is illusory. What that means is that you give an impression that, look, I have the capacity to meet obligations. Nancy, the reason why banks, people keep their money with banks is because they have an impression that anytime they need their money, they will take it back. They have access to it. The reason why banks fail when there's a run on the bank is that when that confidence is cultured, everybody wants to take their money at the same time. And that's the concern I have. We shouldn't get to a point everybody wants to take their convert their naira to a dollar because they are afraid that the dollar was 750 a week ago. It's now 822 today. It could get to 900 tomorrow. And then at that point, they say, well, I've lost so much. So let me stop loss. Let me stop my losses. And then once you get to that point, the economy will be in difficulties. So I thought they would have arranged some level of support, if you call it, but it's not budgetary support. It's going to be a kind of balance of payment support from a multilateral financial institution. It could be IMF that provided that. It could be, like I said, a friendly reserve bank. And that would have been used to create an impression, like I said, even if it's an illusion, that they have the capacity to clear the market. And if that had happened, those who were desperate to take their money would have calmed down. People who are front-loading their purchases would have reversed that. In fact, it would have been a situation where people who would have thought the naira is appreciating, and then those who are holding back foreign currency position would have come to the market to liquidate them because they are afraid that they will lose money if Naira continues to appreciate. And that, for me, is what is missing. So you don't make such an announcement without a fallback arrangement to say, look, I will clear at the rest of those who are more desperate to go out. And this is what I mean by those who are most desperate to go out. If, for instance, you brought in capital into the country, and then you had your money with central bank, you have been bidding to get your money out, and they had about 461 million naira, which would have given you $1 million. All of a sudden, an announcement was made that $1 million will now be something like $600,000. At that point, you say, let me cut my loss and I need the dollar. And then if you still can't get the dollar, and they say you can go to the I&E window to buy, and you go to the I&E window, you can't get the dollar, what happens? You are ready to buy the money at any cost or at any price. And then you are saying, okay, I will, instead of 750, let me get it for 780. And then on and on and on. And if there are many of you doing that, you will have a situation where you have market demand far outstripping supply. So that for me is what is missing, and that's what they should do quickly do. If we don't do it, we could have a well-intentioned policy that we have all agitated for, implemented so badly that it could have effect that people can look at us and say, look, you guys don't know anything because you guys have forgotten and this is the damage you have done to the economy.
Okay. You know, that was why I asked the question earlier in terms of if we have a holistic sense of what President Tinubu's economic strategy is in terms of even the implementation, because what we've seen is that after every policy announcement, there seems to be a knee-jerk reaction, a knee-jerk response that will follow it. Mr. Chukwu, I want you to be clear on what I had asked earlier. I heard you clearly. You said that the Central Bank of Nigeria is still a market maker in the foreign exchange market. Please, I would like you to explain that further, because what I understand perhaps we have now is like a free float currency market. What we used to have before, according to the CBN, was managed floats. There was even a time that the Central Bank of Nigeria was selling dollars to BDCs. Perhaps they used to do like 3 times a week. They reduced it twice a week, and I think perhaps once, until they took it off, I think, in 2021. So please explain that point for me where you said they are still involved in the market. Since it's the same CBN that also says, no, this market is a market of demand and supply, free coming, free go out, and all of you should depend on the rates from the I&E window.
Okay, previously what the central bank was doing was largely allocation. The central bank will ask banks to submit their bids, and then you will submit with specific customer details. And the central bank will say, give to Nancy Nnadi $50,000, give to Justin Chukwu $5,000, and on and on and on. And then they will give that to the bank, and the bank will come back and say, okay, we got 5% of allocation, but this allocation is not that 5% across the board. Some people are getting 70%, some people are getting 0%. So that's what they were doing. They were effectively doing the rate allocation, no matter what they called it. What they have now is that central bank comes to the market and offer to sell, so which is why they said they have an offer and bid rate. They've offered to sell $5 million, for instance, at a particular rate. Then traders, Bank A, Bank B, Bank C, will come to the market and offer to buy. Each of them will come to the market and say, look, we want to buy $3 million. This one comes with, they want to buy $2 million, and we're ready to buy at this rate, and we're ready to sell at this rate. Assuming, so what eventually happens is that if in the market dynamics, Bank C has a customer who say, look, I'm ready to take this money at 900 naira. Please go and bid for 900 naira for me. So, and Bank C comes to the market and bids for 900 naira as his bid rate to buy. Remember, the only person who is supplying is central bank, or the largest supplier is central bank. You could actually have a Bank F that has some supply of $500,000 and say, okay, take the $500 at your 900 naira. But if the larger portion of supply comes from the central bank, because today central bank is still the custodian of the largest pool of our foreign exchange earnings. Remember, remittances coming to NNPC.
I wanted to ask that too.
Comes through the central bank. So they are still the market maker. They get our foreign exchange earnings is still 90% from oil and gas. So the central bank will get a large chunk of that amount that comes to the country, and that means
But
they are the ones that with largest capacity.
Mr. Chukwu, please, can I just come in here before we start confusing Nigerians as to many things? You know, those of you that are economics. The NNPC is supposed to supply the CBN foreign exchange. But in the last 1.5 years or so, we know that the NNPC too has not been remitting money to the Central Bank of Nigeria. So where will the Central Bank of Nigeria be getting that FX to supply to banks? Now, as you have said that they are market makers, will it dip hand into the foreign exchange reserves to do that? So
Okay,
I don't know where this, we shouldn't confuse people.
okay. Okay. Well, Central Bank said the NNPC are not really meeting to it for the past 1 year. But beyond NNPC, the independent oil companies are also obligated, according to the Central Bank Directive, to remit first to Central Bank. I think that it may change in the immediate, but until recently, the Central Bank mandated all the oil exporting companies, oil producing companies to remit after deducting their operating expense to the Central Bank. And then remittances coming from Nigerian liquefied natural gas also goes to Central Bank.
Okay. Okay, hold on, Mr. Chukwu. Let's hold a break here and also clarify. Now, you said where the sources of dollars will be coming from the Central Bank. How about the remittances from diasporans living abroad? That might come straight to the banks, isn't it?
Yes, they will certainly come straight to the bank. They don't go to the Central Bank.
Now, with all the restrictions that we saw in the past that the CBN has taken away now, there's no restriction on the domiciliary account. Central Bank of Nigeria is doing quite a lot now in terms of removal of what was there before, assuming that it would encourage more remittances. What will banks do with those dollars that come in a foreign exchange? Because even last week, the Central Bank of Nigeria did tell banks that now you have the options. If your customers want you to pay them in naira, please, by all means, do that. So if these are measures to be able to increase the supply of foreign exchange into Nigeria, we assume that it's going to be higher. What now will be the role of the central bank in terms of this market maker thing that you said earlier? So if banks now have more dollars, would there be a need to go to the central bank or for the central bank to offer, and the banks now bid?
Okay, let's not forget that the central bank is the reserve bank. Why some countries call it the reserve bank is we say lender of last resort.
Last resort, yeah.
The central bank is a custodian of the country's reserve, national reserve. So what that means is that, assuming we get to a point where the flow of capital, foreign capital into the country is so huge, central bank will buy up a reasonable portion and hold it in reserve so that when the need arises, it will supply it. It's like what you say, that this is your silo, your ban. The central bank will continue to maintain reserve of foreign currency for the country. The central bank is the one managing the country's foreign currency reserve. We know that. Okay, so head or tail, the central bank will remain a market maker in the FX market. The only thing that when we have multiplicity of sources of foreign capital flow, the need for central bank to intervene and interface will be reduced. But at any point when there's a critical need, the central bank will come into the market to stabilize the exchange rate, either in terms of buying to make sure that the currency does not strengthen too much or weaken so much, or to sell to make sure the currency does not weaken too much. So if the currency is weakening, the central bank should be able to sell foreign reserve. And if currency is strengthening too much, the central bank should be able to buy foreign reserve, so as to achieve equilibrium, because you need some stability in exchange rate for.
Wow. Okay.
Inflation.
Okay, Mr. Chukwu, I can hear you now. The audio went off a bit.
Okay. So the interest rate, the exchange rate are all to some extent related to the exchange rate. But back to the issues around that now that currency has been harmonized, has been harmonized, we should expect a lot of capital flow into the country. One other thing I must mention, you have to just step back to what we were at the end of the first quarter of this year. Total capital in the country was only $1.13 billion. The preceding quarter, last quarter of last year, that fourth quarter of last year, was only $1.06 billion. So what people expect that all of a sudden you're going to begin to see 5 billion, 10 billion in a quarter. What will drive it? I had mentioned for the portfolio investment or foreign portfolio inflow that you need two components: exchange rate stability and liquidity. And why do you need exchange rate stability? If somebody had brought in $1 million 2 weeks ago at 750 naira to a dollar, so he would have converted to 750 million naira for his $1 million, a foreign portfolio investor. And then he finished selling, maybe he has made 10% gain, which would have given him something like 75 million. So if you add it to that, it goes to about 850 million naira, and he now wants to buy and remit back. Today, he can only get maybe at 822 to a dollar. In fact, he actually would have about 825. If he made 10%, he would have 825 million naira. Today, if he wants to buy, he will have to buy at maybe 822 naira. And because there's no liquidity, so he can't get it. So if he can't get it, and he has to wait for another 1 week, and he gets to 900 naira, despite the fact he made 10% gain in 2 weeks, he would have lost money. Because when he converts back to dollar, he will get less than $1 million. And that's why foreign portfolio investors will not go to the market economy, any economy where there's such level of instability in exchange rate. So we need to achieve stability in exchange. So in terms of expectation, that all of a sudden we're going to see so much a deluge of foreign capital coming from foreign portfolios. It may not easily happen until we achieve liquidity and exchange rate stability.
Okay.
Then in terms of domestic remittances, I don't think it is so huge, it's such a flow that all of a sudden it will compensate for lack of export. Countries' capital, foreign reserve management or foreign reserve strength comes from export, not just remittances. Of course, India has a lot of remittances. Nigeria, we say we are getting so much of remittances, but I don't think that is enough to meet our import in any way. So as long as it's not so huge as to overshadow or our import or to be higher than our import, you are going to be having balance of trade deficit. A balance of trade deficit will lead to erosion of your reserve. Erosion of your reserve will lead to weakening of your currency.
Okay. Mr. Chukwu, while we're still with this currency matter, and you know that just last week, President Tinubu sent a request to the National Assembly asking it for approval over the palliatives funding and all of that. I would want us to explain to Nigerians the $800 million loan from the World Bank. And I asked the World Bank chief here in Nigeria, I've asked him several times, if that is a loan or if it's a grant. And he told me specifically that it is a loan. I saw in the news today, I think one daily like that, I can't remember the name, saying that the Senate said it is a grant. But I really, the World Bank says it is a loan. I don't know where the Senate got that from, or if the World Bank has told them something else. Mr. Chukwu, why are you laughing? There's these economic things, a lot of confusion here and there. But where I'm going to specifically is some people are asking, should Nigeria borrow $800 million from the World Bank since you are not distributing, you're not going to distribute dollar notes to Nigerians as palliatives? If this loan is gotten from the World Bank, definitely it will go to the central bank for clearance and all of that. What would happen is perhaps the central bank will change or assume they will not give us dollars. So what is the economic logic in borrowing $800 million in dollars to give to your central bank, perhaps to change to naira to distribute, when you're a sovereign country and you can actually take that decision that you want to do intervention, because where will the CBN even get the naira that it will exchange to the government for that palliative? So I want you to answer this, and then we'll take it from there. Because I've heard different, people have asked me this question, and I try to also explain, but it seems that they are not taking my explanation. So perhaps give me your own explanation.
Okay, basically what happens that when the government makes expenditure, it has to be funded. The funding of government expenditure could come in form of government revenue, tax revenue, which is taxes taken from you and I and companies, earnings from sale of crude oil, and if it's coming from earnings from sale of crude oil or our liquefied natural gas, it will come in form of foreign currency. So when it comes in form of foreign currency, the central bank will convert currency to naira and hold the reserve, the dollar reserve. So in effect, the central bank gives the government naira, and then the federal government, in effect, central bank buys the dollar from the government.
Where is that naira coming from? Because the CBN, would you say that where is the naira going to come from? Is the CBN just going to enter the vault and just take the naira and give to the government?
Okay,
Mr. Chukwu, sorry, we are entering economics class, but we need to answer these questions. Yes.
Okay, let me go take us to economics 101.
Yes.
Basic secondary economics. Ordinarily, for every naira that the central bank, it should be backed by dollar.
Because the dollar is the supreme currency in the world.
It's a reserve currency.
Yes.
So in effect, for every 750 naira you are holding today, the central bank naira you are holding today, it implies that if you need dollar, central bank will give you a $1 for that 750 naira you are holding. We used to talk about the gold reserve era, where for every currency that is issued by a central bank is backed by gold in the reserve. Yeah. But we moved to that, and we're now talking of an era where it's not even backed by anything. But
yeah, because the dollar is not backed by anything anymore.
Yeah, the dollar is not backed by anything.
So why can't anyway? Let me not halt your thought process.
If you get to the point where we're just printing money that's not backed by anything, you are going to have the kind of inflation you had in Zimbabwe. So the issue is that for every currency, the country prints, the central bank prints, it must be backed by dollar reserve. So if the central bank gets $800,000 today, the central bank can print 600 billion naira and give to the government. And then he's keeping that reserve. And that's why I keep saying that the central bank, as a reserve bank, can also go to the market and stabilize the exchange rate based on the fact that it's keeping reserve. So that's what happens. So if in the alternative, the central bank, the government has said, let's go and borrow. When we talk of the government borrowing, they're telling central bank, please, just disburse without any dollar backing. So if the central bank does that, it has an inflationary impact, and it weakens your currency because you're going to see so much naira that is not backed by any reserve. So the central bank, the government had a choice, because that choice was there, to ask the central bank, just like it had done repeatedly, to borrow from the central bank. To borrow from the central bank would have meant that he had asked the central bank to print money that is not backed by anything. But good thing, there is a support from the World Bank in the form of $800 million. So that will go into the reserve, and the central bank will buy that dollar from the government and give the government naira.
Okay, that brings me, you know why I said I didn't want to halt your process? Because while you were speaking, something came to my head. I know some weeks ago that we saw BRICS countries saying that they would really like not to do much anymore with the dollar. And Nigeria would have been part of the BRICS countries some years ago, about 10, 15 years ago, if we had done some things right. But we now went to the mint countries. Now, with what you're seeing right now, do you think BRICS, talking about Brazil, India, Russia, which other country, China, then South Africa, do you think that Nigeria should also be thinking along the line of BRICS, their sentiments, because of the economic issues that we're having right now?
Well, let's even start from why we're not part of the BRIC country, because our economy stopped growing at some point. Ordinarily, at the rate we're growing in the 2008, 2000 to 2004,
2007, 2008.
2007,
Yeah. Of 2000, yes. Early 2000s.
BRIC countries.
Yes.
But the key thing about what the BRIC countries say is that, look, they want to migrate from dollar as the reserve currency, as the global reserve currency, and the reserve currency as it relates to those economies. It could happen in the future, but it's not a short-term thing. In the first place, they have to find another currency that will serve as the reserve currency. Will it be Chinese yuan that will serve as the reserve currency? There has to be some medium of exchange between countries. There must be some commonality in terms of medium of exchange between countries. Because if you take the Brazilian real and now want to convert it to the South African rand, there has to be a third currency, there has to be a primary currency that would be the basis for you to measure the conversion rate. Unless you have to go back to gold and say, which is in that case, you have to find some level of exchange that would be a basis for the parity. And that's what the dollar does for the world today. If the dollar ceases to do that, maybe they go to euro, maybe they go to Chinese yuan, but there must have to be a global medium of exchange. Maybe the cryptocurrencies will do it in future. Technology could do that. But like I said, there has to be that medium. There has to be that channel that you can use that will be a commonality for conversion of multiple currencies of different countries.
Okay, let's go back to the argument around 800 million US dollars and the 500 billion naira that President Tinubu has asked for. We've been told repeatedly, even under Buhari's government, even in Jonathan's government, that, guys, let's take away subsidy. If we take away subsidy, we're going to free money for other things. Some people are also asking, you've taken away subsidy now, so why are you borrowing? Take the money that we would have saved. We would have saved the first half of the year, we would have saved about 3-point-something trillion. Can you guys enter there, take the money and do what you want to do? I'm also aware that, of course, the NNPC Limited is saying the federal government is owing us about 2.8 trillion naira. So why I'm bringing all those sides is because I've heard a lot of things in the past few weeks, and I've tried to answer a few questions. So I'm bringing those questions to you now. What is the logic behind that? If the government is saying we need to free up resources to be able to make us do this, and the government is still going back to borrow, so why should the subsidy be removed? What is the economic sense there?
Okay, in the first place, the subsidy was had become unaffordable. According to Nigerian National Program Limited, NNPC Limited, they say we are spending about 18 billion naira on subsidy every day, about 400 billion naira a month, about 6.5 trillion naira a year. And if you just step back to last year, at the end of, for the first 11 months of last year, the federal government revenue was on 6.5 trillion naira. And that's about the amount that was spent on subsidy last year. So it then means that the subsidy alone wiped out the entire federal government earnings, assuming it was only federal government that was sharing it. But let's take it further. This year, the government has said they will pay budget subsidy for only 6 months, at about 3.3 trillion naira. But that at the end of the year, the government deficit will be about 12.1 trillion naira. So the reason why people are saying, the logic about people saying, okay, you remove the subsidy, so why don't we just deploy the money instead of borrowing again? I did say that the subsidy was about 6.5 trillion last year, according to the NNPC Limited and the Ministry of Finance. So, and that amount is actually shared by the 3 tiers of government because it deducted as source before distribution. So it's not just going to the federal government. But the portion that applies to the federal government get about 54% of I think 48% of FAC allocation. So if you consider that, so the central bank, if the federal government will get about half of the 6.5 trillion naira, something like 3.25 trillion naira. That is their own portion of the savings from subsidy. When this year alone, their deficit is going to be about 12 trillion. So even when you apply the savings from subsidy, the federal government will still end with a deficit. The federal government, these savings will at best reduce the amount of deficit and will not in any way add to the reserve of the federal government or lead the federal government to have savings. So there will be savings in terms of amount that would have been spent on subsidy, but because we have a fiscal framework that has so much of deficit, it will just be swallowed up by the deficit at the federal government level. At the state level, some states could already have some savings which they can deploy to valuable economic and social use.
Mr. Chukwu, just 1 minute because I need to let you go for another appointment. In just 1 minute, are you surprised that President Tinubu hasn't come up with his ministers list yet, despite the rumored list that we are seeing 6 weeks plus on? Now we know, of course, according to the constitution that President Buhari had signed before he left, 60 days. Now President Tinubu has done 6 weeks. Are you surprised that by now he hasn't released his list of ministers?
Yes, it's actually very strange because I know one of his spokespersons said that the list will come out within 30 days of the inauguration. We're just like 12 days shy of the time limit specified under the Constitution. But you know, I'm not versed in political issues, but I guess they are trying to sort out a lot of political intrigues. But one would have expected that within the 30 days, because I'm not sure there's anybody that will feature in the list that is unknown to them or that they don't have full dossier on. So if we are going to employ people who have been working with you, you've known, even if you are going to ask for recommendations from some of the state governors, and they ask for 3 nominees per state from the governors, a week is enough to appraise them and pre-qualify them and have the list sent to the National Assembly. But I wouldn't know what, like I said, I'm not good in political intrigues. I wouldn't know what is informing the delay that we're just 12 days share of the time limit specified in the Constitution.
Okay. Thank you very much, Mr. Chukwu. I need to let you go now. We'll continue this conversation on another day, so do have a good day. Thank you for joining us. I've been speaking with Johnson Chukwu, who is the Group Managing Director at Cowry Asset Management.